So today's topic is how to buy a home for little to no money down. All right, so today I'm going to cover one of the more popular down payment assistance programs, which is also one of my personal favorites, and it's the My Home Assistance Program, which is funded by the state of California. Now, even though this is a government program, you do have to go through a lender that's approved by the state of California to offer the program. We are an approved lender, so if you have any questions after watching this video, or if you'd like to apply for the program, feel free to contact me and I'll let you know how to get started. So this video is going to cover four things. Number one, how to qualify for the program. Number two, how the program works. Number three, how much of your own money you will need to buy a home when using this program. And number four, it'll cover the negative aspects of the program. Even though this is a fantastic program, it does have a couple drawbacks, which we are going to cover. So first, let's cover how to qualify for the program. Now, in a nutshell, the state of California will help you with the down payment on the purchase of a home as long as you meet three criteria. Number one, you cannot have owned a home in the past 3 years. Number two, you must have a minimum credit score of 640 or above. And number three, you must meet the income limits. Now, the income limits vary by county, but they are pretty lenient. Just for example, in Sacramento County, you can make up to $150,000 a year and still qualify. And in Contra Costa County, you can make up to $192,000 a year and still qualify. Now, one thing I want to mention about the income limits is these income limits only apply to the person on the home loan. And what I mean by that is, let's just say, for example, the income limit is $192,000 a year. And let's say both you and your spouse each make $100,000, so combined you would be over that 192 limit. Well, in this example, you can still qualify for the assistance program as long as only one of you is on the home loan. So really, we only need one person's income to be under that limit in order to qualify for the program. So next, let's cover how the assistance program works and whether or not you're going to need any of your own funds to get into the home. The most popular first-time homebuyer loan is called an FHA loan, and it has a down payment of 3.5%. So for example, if you were to buy a $400,000 home, a 3.5% down payment would be $14,000. Now, this My Home Assistance Program, it covers that entire 3.5% down payment plus part of your closing costs. So if we can get the seller to give you a credit towards your closing costs, then technically we could get you into a home for no money down. If the seller is not willing to cover your closing costs, then you would typically need between $3,000 to $5,000 of your own funds. So worst case scenarios, you're going to need $3,000 to $5,000, but in many cases, we are able to get our clients into a home for much less. And one important thing to cover is the money that you're receiving from the state of California to help you with the down payment is not free money. It is a loan from the state of California. Now, there aren't any monthly payments on this assistance loan. It just kind of sits there, but it does have to be paid back in either 30 years or whenever you sell the home, whichever comes first. Now, this down payment assistance loan is actually broken up into two parts. Roughly half of the assistance has zero interest, it's interest-free, and the other half does have an interest rate of 2.5%, which is pretty low. But just to give you an example, if you were to buy, let's say, a $300,000 home, the interest that would accrue from the down payment assistance loans would be about $20 per month. Four quick things I want to point out. Number one, you do have to move into the home. This is for owner-occupied loans only. Number two, the home has to be on less than 5 acres of land. Number three, this is for single-family homes, so a house or a condo is fine, but a duplex or a multi-unit property is not allowed. And lastly, I do get asked all the time, can I pay these assistance loans off early? And the answer to that is yes, you can pay it off anytime you want to, but most people do wait until they sell their home. So now we covered the good stuff, which is how you can get into a home for practically nothing down. Let's talk about the drawbacks. There's two small drawbacks to this program. The first is the closing costs are a few $1,000s higher than a normal loan. Now, these higher closing costs are covered in the down payment assistance, so you're not really paying it out of pocket, but it does get added to your loan amount. The second drawback is the interest rate on a down payment assistance loan is a little bit higher when compared to a regular loan. So your monthly payment when using down payment assistance is going to be between $50 to $100 a month higher than if you didn't use it. So really you just have to decide, is it worth saving $15,000 to $20,000 on your down payment if your mortgage payment's going to be a little bit higher? Well, hey, that's pretty much it. If you have any questions or comments, please leave them below. And if you know anyone that's thinking about buying a home or anyone you think should buy a home, if you do me a favor and hit that share button below, I would appreciate it.